Get ready for a big one tonight as we bring you 10 ASX stocks with multi-bagger potential. Can they go up 2, 3 or 10 times from here? Stick around to find out as we break it down with our signature government-accredited share trading education that has seen us feature in major media platforms Australia-wide. I'm Philip Tortevsky, joined by senior analysts Janine Cox and Pedro Banales, and we are Wealth Within. Good evening, Janine.
Good evening. I'm excited about this topic tonight.
Yeah, what's more exciting than multi-baggers, right?
No, it's huge, yeah.
Huge.
Hopefully there's something over $1 for me.
Yeah, I'm sure there will be. And Pedro, how are you going, mate? Welcome back.
Very well, guys. What a show to come back to. I mean, this is going to be excellent, and I've had a peek and I'm very excited about one of them in particular, but I'm sure we'll get there.
Yeah, look, the pressure's on, right? They got to perform. But anyway, let's get right in. We're hunting stocks that have the potential to double and more tonight. So before we dive into those stocks though, when looking for these kinds of opportunities, what is the most important thing investors need to consider? Because obviously, you know, there are areas of the market or pockets of the market where stocks jump, double, triple, a lot faster than others. But there are also risks and things that go with all of that. So what is, I guess, the main thing investors chasing multi-baggers need to be conscious of?
Well, I would say the first thing is going to be risk, and most people all know that that's what I'm going to say. The second thing is your upside, and this is where you've got to be really well versed in technical analysis to work out how far these stocks could run. So that's the second thing. I guess it's also about positioning yourself. That's really important. Your position sizing is key to making sure that you're not taking more risk than you should not. I had a phone call with a lovely gentleman today. We were just talking about exactly that scenario where, you know, sometimes the position size doesn't even worry you, and that's the ideal position to be in, is to not even feel it. But when people start to feel it, when they've had a few losses, then that's when
mistakes happen.
Yeah, because it affects the psychology. So it's really important to consider that.
Yeah, great advice. All right, now in terms of where our market is right now, how many of these multi-bagger opportunities will exist over the next couple of years, and what areas of the market are they likely to be found in? Pedro, I want to go to you here, mate. Is it more, I guess, given our market's obviously been in this really strong bull run over the last couple of years, is it important to be sector specific or maybe theme specific when looking for the next multi-bagger?
Absolutely. I think sector and theme go hand in hand because, you wouldn't be looking for the Bitcoins of the world right now. You want to focus on where the money is flowing into, and that's basically resources, defense type stocks, materials, and energy as well. So you want to get behind that momentum. The theme from last year is not going to be the same as this year, in particular. And if you want those outpaced returns and those fast returns, you've really got to get behind those tailwinds that are happening in the market right now. And I really think that those sectors in the market are the ones, getting the best bang for the buck at the moment.
Yeah, so you're saying what, materials at the moment, tech? Is tech an option or?
Tech seems to be coming back, but it's still a little bit dangerous. We've got the reporting season coming out in the US, their quarterly reports, and I believe 5 of the Magnificent 7 are yet to report this week. So I think that the market is a little bit on edge waiting to see what happens with their reporting. So, the likes of Amazon, Microsoft, and Meta, they're all coming out with their results. So I think that the technology sector is going to be on the edge waiting for those results.
Yeah, I'm glad you mentioned that because I know you, Janine, have got something special coming up relating to that topic. But let's dive into some stocks. Let's not wait any longer. What's our first multi-bagger?
Okay, the first one on the list is Arafura Resources. ARU develops rare earth projects, particularly neodymium.
He stitched you up here, hasn't he, trying to read this?
Have parasodium used in EVs and wind turbines, may do well due to growing global demand for critical minerals tied to electrification and energy transition. Now, you yourself last week were talking about this, and if anyone's missed out on last week's show, make sure you check it out. Really important information in that one. You said what's happened right now is there's been so much focus on oil that people have actually taken the eye off. Oh, there you go. Geez, a week happens so quick, doesn't it? We talk about this sort of stuff all the time, though, and where the opportunities are. And, how everyone was looking at oil and that focus was on oil now the focus is starting to shift already to other things like this. So this is a really interesting stock to have a look at. Its volatility is quite significant, but it could allow for a really nice little opportunity. Now, you can see the sort of setups that we've shown you on the show before is where you get these bounces off lows, then you get a bit of a consolidation, and all of a sudden you've got to be ready with the right strategy to get into it. And it took off like a rocket. Now, someone said to me the other day, you know, if a stock takes off, I've had a few recently that I missed because it took off quite significantly. But you've got to be planning for that, especially at this end of the market, thinking the volatility could be there. But if we have a look at what's happening on the chart there, we can see there's a line that goes right through this sideways consolidation there. It's well above that at the moment, looking really nice. I like this. Some might be a bit more conservative and wait for a pullback to retest that. It has already had a bit of a test of that line in April, mid-April, and then it's taking off again. So I think this one looks really good. Whoever picked that, you know, is doing well.
Can I ask you a question when it comes to this? Because you mentioned a really important point. How important is it not chasing these stocks? Like, if you miss an opportunity to get the price you want, are you chasing any stock on the way up as it's unfolding, or are you saying, look, you know what, I know the volatility at this end of the market or these kinds of stocks is so large that the last thing I want to be doing is getting involved in FOMO?
Good question. I mean, you're right. And it's a question, whether to take it or not is a question for the individual and their risk management strategy. So, you know, if someone wants to have a tight stop, then, you know, that's one scenario, but it could mean that you get whipped in and out of trades really quickly, and then you've got to be able to handle that from a psychology point of view. But if you're a type of person that is happy to wait and be patient, I mean, it's gone through that significant high there. If you really wanted to wait a bit longer, you could wait for the week. It could be up around 40 cents by then, though.
Yeah, and that volume looks interesting lately. What's going on?
It is decent volume. In the last sort of, 5-6 weeks, it's been really solid volume underpinning the current rise. So that's another thing that's important that's holding it up too.
All right. And I guess upsides, given we're talking multi-baggers, where could this one potentially get to if it really goes on a run? Yeah, good question.
So looking at it now, where it is right now, I mean, to that high, it's 100%. So, you know, it's quite conceivable to think, given that it had just done that recently and tested the way. Someone's already paid for it. You've got to be thinking about it. Someone was willing to pay for it all the way up to 62 cents. So therefore, it's sort of setting the scene to say, well, we could be going up there again. And who knows? It could go all the way to $1.
Yeah. Awesome. All right, let's get into our next one. Pedro, NH3.
All right, NH3. This is one that not many people may have heard of, but it's a quiet little one that I think is making big moves. So they focus on, it's Hexagon Energy Materials, NH3, focuses on producing clean ammonia as a hydrogen carrier and energy source. It may benefit from the push towards decarbonisation and hydrogen-based energy solutions. Now, I think the key word here is ammonia, because we've had a bit of a disruption because of what's happening in the Middle East. A lot of ammonia gets produced over there, and we've seen reports that, you know, obviously it's had a bit of a backflow and not been able to get out of that strait. Now things are looking okay for the moment, but who knows what's developing over there. Still, technically this is looking beautifully. I mean, you can't deny that. Let's start with the monthly chart over here. It's a very volatile stock, but this is what you need for those 10 baggers. When you're looking for 10 baggers, you need to take on a little bit of risk, and you have to be prepared for that. And obviously, the market does have risk. And when it comes to these a little bit more volatile ones, there's a little bit more risk than usual. So I think that there's going to be a little bit of resistance around that 16 cent mark. And right now it's trading at around 10 cents. But that still represents 61% upside until you reach that level. So it's a nice little runway if you were to take a trade soon, depending on the rules that you're using, to reach that level. So if you're in 60% profit, you can afford to let it breathe a little bit. You know, if it comes down, obviously this can move in 1 month. It can move in the manner of 30%. So you don't want it to move 30% when you enter. Just say you were to enter now. And if it moves at 30%, well, it's going to take it back down to that previous low. Still, you need to let these type of stocks breathe a little bit more than you would with a big cap. You have to apply different strategies, and that's what obviously your back testing will show you what type of stop loss you need to put, what type of trailing stop loss you need to put, and what entry rules you're using. So right now, I think it's established a nice little up momentum since that low back in 2025. It's come back to test it twice now, and it's moved up nicely. So let's go to the weekly chart to see that little bit of that closer look. And I mean, that's beautiful. Look at that pattern right there. That's unfolded. This has crossed now above that downward momentum. It's actually looking very nice, and I can't obviously speak too much on it, but there are multiple reasons why you could be in this stock already, or look to get a position on it pretty soon. The only thing I would say is that volume has, it's dropped off a little bit on this downturn here. It has come up a little bit, but not quite as much as you saw back here. But when you look at this little sideways consolidation period here, you can see that the large volume didn't come out until the breakout. So right now it could be on the precipice of that breakout before we see that large volume. Probably on reporting season, we might see a little bit of a move from this one, but I think it's looking quite interesting, and it's got the tailwind of that ammonia story behind it.
Yeah, I mean, look, both of those are absolutely awesome for me, and I reckon you're in for a treat tonight because we've got another 8 to show you before we get into some more amazing stocks. But let's get to our next one, Janine.
Yeah, you're really trying me at this point. Orbital Corporation, OEC. This is the history, and I like to pan out and just have a look at where it's gone. And, this is where you've got to apply caution when looking at some of these stocks and the volatility, not just thinking about the upside, but also the downside risk. But people look at these and they think, well, could it go lower? At the moment, it's broken through what I would say was the historical support that occurred in 2014, but then it's recovered from that, retested it, and looks like it's starting to make inroads again. I think it needs to come back to that line, or at least come back a little bit from this move up before it then takes off again. I would be really cautious about this one, and from the point of view of giving it room to breathe, I think that line that I've marked there at 34 cents is reasonable. Just, some short-term traders may want to try to take it in to see if it'll get up to that level and trade it up to that level, and that's your own prerogative. But these sorts of stocks are not easy to backtest because of the liquidity issues. Don't always tend to give good outcomes for people when they're looking for back-tested strategies. So some of this has to be more about your knowledge and whether your knowledge of the long-term picture, whether you've got the knowledge to work out the strong levels from here.
Yeah, well, it's always the conundrum, right? When is the safer time to get involved? Because obviously these stocks can dwindle around those lows for a long time. And that, like you've said, that 30-cent level gives you a lot more confidence on the confirmation that we're going to see a longer move. But looking at the first 3 stocks, there is, to me anyway, that somewhat of a cyclical nature to these stocks, in terms of, yes, they're not like you would say something like a BHP or a Rio where we're consistently getting that growth and appreciation. Is that more to do with the fact of where these stocks are in terms of what they do, or is it more to do with the fact that they are outside, your large caps?
Yeah, I think it's both because, this one there's a lot of money that goes into development. So as you can see, it designs and manufactures propulsion systems and components for aerospace and defence. I mean, right there, you're talking about big money. And if they get the right backing, like a drone shield or something else, they can continue to take off, but at the moment, we're not seeing that right now. I mean, it has done that during 2019. There was this huge run. And then, of course, COVID hit and that just went south and hasn't really recovered since then. So I'd say, this has got to do a lot to prove itself given that it's been down for so long. Yeah,
I think if anything, it proves, especially at this end of the market, look at those charts, get that timing right, because if you don't, you're going to be sitting there for a while.
Yeah, I mean, people will be reading things about different stocks, and I'm not saying it's not a good company. It could turn out to be a great multibagger, and that's why we've got it on the list. However, it's about, do you try to take it at the highest risk possible time and risk your money, or do you take it at a lower risk time? Yep, sure, give up a bit of profit, but potentially get a reward that's got more behind it, more guarantee of getting it. When I say guarantee, more probability.
Yeah, good advice. All right, let's move to the next one, Pedro. AL3, I believe.
Yeah, so AL3, this is one that we've had in the show a while back, and it wasn't quite ready yet. And you can see on the chart why that is. It's just been trailing sideways, but this is where the opportunities start to show themselves. So first of all, it's AML3D. It provides 3D printing, metal printing technology for industrial applications, including defense and oil and gas. It may do well as additive manufacturing adoption grows for cost and efficiency benefits. So they recently had a contract with the American military. So that's what's prompted this up move here on the monthly, but it looks like it's been sold off again. So a little bit of profit taking, or whether not much confidence in it. But have a look. Let's expand out the monthly chart here and have a look at what happened here on the IPO. It IPO'd in 2020, and that was where we had that bull run after the COVID low. So it actually benefited from that. But then eventually it did get sold off quite heavily and was down to the tune of 5 cents. Basically came down to it IPO'd at 15 cents. So that's a little bit of a warning to, if you're not really knowledgeable, or if you don't really know the company, I would just say at all, don't participate in IPOs, because you don't know what it's going to do until you've got that history. Now we've got a nice little history and pattern forming. And what I'm seeing here is some price agreement in between 13 cents, and on the upper level, we've got 26 cents. And it's trading around that mid band of those two levels at the moment. So the risk to reward probably isn't quite there yet, because if you were to take a trade, you've got about 30% upside to that upper band, and then you've got the same to the downside, about that 30%. So, at the moment, maybe you'd want to wait until maybe it comes down and maybe creates a trading rule, or it breaks above that 26 cent level if you want to be more conservative and wait for that breakout. So let's go to the weekly chart now and just have a quick look at what's been happening. You can see more volume. That's really the story here. There's much more participation, and it looks a little bit more liquid than it has in the past. So right now on the weekly, again, it has these spikes and then it comes down. It has these downtrends and then has a spike and has a downtrend. It's done that for most of its history. You can see, again, it spikes up and then it has a downtrend. Spikes up, has a downtrend. Spikes up, has a downtrend. And Phil, you mentioned the cyclicality of these stocks, and I think that this one is very cyclical in that nature. So if that's the case, that we've already had that spike early 2025, it's come back down. It's probably due for another run quite soon. So this one is one to keep an eye on.
Yeah, and just your thoughts on that, because obviously now it's been testing that IPO price 3 times recently. Does that give you more confidence? Is that your line in the sand in terms of whether or not this one is finally going to see some bulls? Because obviously, I mean, even you, Janine, you see a stock IPO and oftentimes it comes back to that price. That is the check, the market. It's like, okay, this is what it initially was priced at. If it's holding there and above there, does that give the confidence to say, okay, well, buyers are coming in now accepting high prices, this could go for a run?
Yeah, it depends how long it's been holding above it really first. So when looking at the chart that Pedro was talking about before, I mean, it is holding within that range that it's just wanted to trade within. So that's a really good sign. It's what you're talking about, isn't it? The fact that it's getting a lot of support in that range. It's just that it needs some news or something to come out to actually drive it higher and get it back above 30 cents again. But, our next reporting season, that may do it, or it may do it before. I'd actually like to see it pull back for another week or so and then see it move up from here, just to get a little bit more time sideways, because that's what it's been doing. It doesn't just, pull back for 1 week and then take off. It seems to just, pull back, then up, then down, then it's repeating that sort of zigzag before it takes off.
Yeah, and that's the thing, you've got to be careful, right? If you do say, okay, I'm going to wait for something good to happen, more often than not, you're going to look at the share price and go, well, someone else has already, taken the risk. So, watching that chart, I think, is going to be most important, but looks very interesting. Let's get to our fifth stock. Mind you, we've got some absolute rippers coming up right after this. I think even better than the first 5, but let's get to to this one, LKE.
Now, I might surprise you on this one because
what are you going to say?
It's a lithium stock for a start.
Okay.
So that gets my interest. And then looking at the history of it, we know that a lot of the lithium stocks boomed and then crashed. And now,
with the price,
and now we're seeing that consolidation happening again. But we've actually got a number of really good levels on this stock. I've just shown one of them. And, you know, if you've done our course, you'll know how to develop the other ones and look at and find what's most important. But this is obviously develops lithium projects using direct lithium extraction technology may benefit from rising lithium demand driven by EV battery production, which the crisis is driving that, isn't it? Again, we've seen it. You know, it was you could have got, they were almost throwing away the EV cars at one stage. Now it's turned. People are buying the second-hand EV cars to get one.
Yeah, and to be fair, the mandate has not changed. I mean, we still have this mandate to go green. You've got the world, you've got China, you've got all these countries going nuclear or going alternate. I mean, that's been forgotten, as you rightfully said. But
you're the one that actually
I said it,
the other day.
I keep forgetting. But with the lithium one in particular, this stock here, obviously lithium's another story that, you know, I've spoken to so many people that said, buy lithium, buy lithium, buy lithium. But the real turn was when Rio decided to buy Arcadium and pour in billions of dollars. That was literally almost at the all-time low. That doesn't mean necessarily that lithium's going to go on this massive run, but it does mean that there's some big money being poured into these projects to give you that added layer of sustainability potentially. And if you get that into the right company, I reckon you might be looking at a multibagger maybe.
Yeah, I think you're right. And looking at the chart, we can see how important this is to consider because it's actually come off this bottom. We've seen a consolidation, we've seen a long-term low here, a test of that low again, a third test of the low, bit of a sideways move. It's taken off, it's tackling this level at around 15 cents. It's come back, a bit more consolidation. I'd like to see a little bit more of that and then a breakthrough this level, which is somewhere around 15 cents. But if we can get through that, I think this is going to look really nice and should head towards that next level that I had marked on there, which is around 28.
Awesome. All right. Now, if you want to get an intro into the stuff we're talking about here, please check this book out, How to Beat the Managed Funds. By 20%, it's free. You just have to pay the shipping. It's from Dale Gillham. The link is in the description in this video. But as always, if you do want to take things professionally, go and visit our government-accredited share trading education course. There's none other like it, and please check the testimonials out. They are showing amazing results from our clients and a bit of a benchmark on what you can achieve in this stock market right now, which is the perfect time to learn, in my opinion. But
it is interesting.
Let's get to something else very interesting, which is your trending topic.
Thank you. It's big tech earnings week as 5 of the Magnificent 7 report to the market. Tech companies have been big spenders, but when is the payoff? Institutions are becoming impatient. Any negativity in the numbers could tip the market to slide, and any shock could have a flow-on effect to our market. This is it. It's a stress test for markets. Now, according to FactSet, 84% of S&P 500 companies are reporting earnings above consensus estimates, and around 28% of companies have already reported. Morningstar indicated that Meta is unlikely to disappoint with advertising growth near 30%. This may be the first year when Meta's ad sales exceed Alphabet on a net basis. They are suggesting Meta is undervalued, and the expectation over the long term is a valuation of $850 and 18% compound annual growth rate for the next 5 years. I was going to say 15. I have my own view on these numbers, Phil, and I'll get into that soon. We will get into that with the charts because they are fascinating, aren't they? Now, either way, it's going to be an exciting week with a golden lineup: Alphabet, Amazon, Apple, Meta, and Microsoft. Let's take a look at the charts.
Interesting, isn't it? I mean, like you said, this week is going to tell us a lot about the tech sector moving forward, because there was all that talk, it's overvalued, a lot of CapEx spend, it's not going to be able to repeat, and we just hear they're all slamming earnings.
Yeah, they're slamming earnings, and the earnings are coming out above consensus, and some of the analysts are saying that Meta looks good and could be undervalued over the next 5 years. But first of all, I just want to say that, you know, if our theory about the overall market, before we get into what's happening on the chart, that if the theory about the overall market is that we're going to see a peak in the market, which we're expecting to see in 2027. And possibly, if the tariffs have done something to cause the market to be, to cause this to be pushed out because of the delay. You know, we saw the market make a sideways move, and then all the stocks eventually burst out of the blocks. We saw Rio and BHP do that, but we really haven't seen their full upside yet. But if this peak ends up being delayed, then yes, I think these tech stocks are going to be driving it. However, there's a big question mark about whether the peak is coming in 2027. If that's the case, then these stocks may get the benefit of this short-term rush, and we may see a peak in the tech stocks in the first half of 2027.
And I think just to add on top, watch that oil price, because tech and oil have been so correlated inversely. If this really is a top for oil at 115, 120, which it seems to be, you know, and falling, then tech is going to benefit a lot.
Yeah, you'd think so, wouldn't you? I mean, that's...
Well, it's happening.
It has to, doesn't it?
Yeah.
So all of a sudden we've seen a sideways market, and there's been all this talk about tech and the cost of, you know, running these big servers and the cloud computing and the AI. And now if that reverses and oil comes back again, what you're saying is that they should take off again, because they'll be able to pump up the earnings in future.
Yes.
Yeah, and if we look at the charts and we see that what's been happening with Meta, we've seen this initial pullback. Now, what is concerning in the short term for me is the pattern that we're seeing on the chart, because this pattern is a classic pattern that could see a decline unfold. It can also be a sideways consolidation for the next big run. But if this is the sideways consolidation, earnings comes out without a hitch. If Meta gets through this peak in January, we could see Meta head towards the 1,000 mark. You know, that's really quite possible. But this pattern is just sending a little warning sign, and that's one of the things that students are, you know, aware of and are just watching to see what happens. Because if that pattern is broken with the move that I talked about, then the decline that could unfold from this sort of pattern, which could force Meta down to between $300 and $400, we're talking about a massive decline if something's wrong in the numbers.
Yeah.
And the market at this point is not tolerant. It's just going to take advantage of that. So that's really what I'm saying. So I'd be watching, first of all, this month's low, which is 55973. If it takes that out, then you know we're still in decline. If we take out this high here, then I think that bodes well. If it's a strong close above that January high, then we've got further upside to come. And that will be good for our market as well.
Fantastic. All right. Well, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more multi-baggers. I'm going to go to Pedro. He's been sitting on the sidelines there. Pedro, APX, mate.
Yeah, so what a stock to follow up with regarding the tech sector, because if the tech sector takes off, this one is going to follow along with it, and it looks like it's setting up for just that. Let's have a look at the monthly chart. This is Appen Limited, and it supplies data and AI training data sets for machine learning models. So big theme here at the moment. Now, it may perform well as artificial intelligence and automation continue to expand globally. Now, they had this huge downturn because they lost their biggest customer, Google, and there's been a lot of outsourcing for their data training, even for other companies as well. So at the moment, we still wait to see what the fundamental story is, whether they can acquire new clients or maybe move to a new service offering. But at the moment, the chart is telling us something interesting. It's actually, it bottomed back here in 2024, and it made a higher high in July 2024. It actually came back up in January 2025, made a higher high in April 2025. So already we've got higher highs. Then it crashed back down, and in November 2025, it made a lower low. So at the moment, I'm just waiting to see whether it does something like this and it takes out this previous low, in which case then we're probably going to trail down the bottom a little bit. Or if it does come back up, which I think actually this is the more likely scenario, then we're going to have a bit of a retest of that previous high, which is around $3. And if you look at where it's trading at now, that's $1.60. That represents roughly a doubling of the share price and doubling of profit. So almost 100% there to the upside. So this one could be a double bagger. and possibly even more beyond if it does break above that $3. Going to the weekly chart here, this is where it gets really exciting, and it's this little sideways consolidation for me. The fact that volume has increased into the breakout and it's just trailing off a little bit, it's just consolidating sideways. It doesn't want to trade below this level here. If I can put that properly, $1.30, doesn't want to trade below that, and that's a very important level for Appen. It's actually been a level of resistance in the past, and even going back all the way back to 2017, you can see that it was a level of support back here. So I would say that we obviously have to wait for it to break that momentum. There's also a bit of a downward momentum happening over here that it's finding resistance on. I would say that if it does break that band, then we're in for much higher prices for Appen. So I think that this one is almost ready. Pretty exciting times.
Yeah, it does look very interesting at the moment. Your eyes lit up when you saw that one.
My eyes did light up. I really like this, and I really like the stock as well and the whole story behind it, what the CEO is trying to do. So, and what I got excited about was anybody who tuned out is really going to miss out, because these are nice big stocks. Every single one of them that I'm about to look at, when I say big, bigger than $1.
Oh, yeah.
I think you guys lined me up for the first lot, didn't you? Because you put all the penny stocks first just to stir me up, but I didn't buy it.
No.
Now I can see what's really here, which I'm really excited about, as you say. So the next one that I can talk about is Clinuvel Pharmaceuticals. Now, some of the pharmaceutical stocks have been in decline, but this one, maybe it's coming to a bottom soon. Develops and commercialises treatments for rare skin disorders, may do well due to the niche pharmaceutical markets with strong pricing power and recurring demand. But what we're seeing now, though, is we've seen a sell-off of all of these pharmaceutical healthcare-related stocks. So this is the area to watch, isn't it?
Yeah, and they came out with some news today regarding some FDA type approvals, which is very interesting. We probably should have brought it on today, but keep a close eye and go and check it out, because it may mean, like, obviously with these companies that are in this R&D, a lot of them, as you know, when they're building these products, they're not at that revenue stage, but once they get there and they get approval and they bring the product to market, it can be huge.
So what you're saying is just keep it on the watch list, because it is a long-term thing just to watch these stocks and just have them on a watch list, and you could have them on a separate watch list because it's just broken through that level, and there's another one underneath it which is down here, so it could actually continue to fall in the short term until it finds that bottom. And once it finds that bottom, potentially secure funding as well, if it's actually being successful in getting those patents across, and then off it goes again. Yeah,
because it's a different story to something like Cochlear, right? Obviously Cochlear has been the big stock that's spoken about over the last week, where it fell 40, 50%.
Yeah.
But that had been falling for a while. And if you look at Cochlear versus this, Cochlear is a company with a huge moat, big powerhouse in the healthcare sector, earns revenue, and Cochlear's been through worse, to be honest. Yes, there's a big macro slowdown globally, and that's what's affecting the profitability. But you've got to remember, 2020, COVID, Cochlear's business shut down. They couldn't perform the procedures. And then in 2011, I think they had a massive product recall, which took about 60 or 70% of profit from the most profitable part of the business. So, and you look at the recoveries from there. So this is in a different scenario, because it may not survive if it's reliant on that funding. It may not get to the powerhouse stage before it can put its stuff out to market. Yeah, but what you're saying is don't try and jump in on the news. Just wait until you get that confirmation that something better is happening. You see the bounce unfold. You can see that there's interest in it. Well, understand if somebody says, I'm looking to buy Cochlear on the dip, very different proposition to buying CUV on the dip. Yeah, that's right. Because of the quality of the company. So things to consider, but good points. What do I know? Anyway, let's move on to our next stock, BOE. I was hoping you'd get this one, Janine, Boss Energy, but we'll pass it over to Pedro. Boss Energy, mate, what do you reckon?
I'll take this one off you, Janine. Boss Energy, that's a uranium play. And I think it's got the tailwind of more and more uranium coming into play. We've just recently had the news that a new power plant, the first one actually in 40 years, built in USA, is now up and running. in Georgia, in the state of Georgia in America, and also the TerraPower, which is Bill Gates' nuclear power plant, has been given the green light as well to power all their AI. So we're going to see a lot more demand, I think, for uranium coming up. Now, Boss Energy, fundamentally, I think it's going through a little bit at the moment, hence why we've had this sell-off. I believe that they're waiting for approval for one of their mines, or something was going on, along the lines of their production. Look into that. But basically, they're a uranium producer focused on restarting the Honeymoon project. So that's that project that I was talking about. I think that they're having a bit of issues there in South Australia. So technically, it has been sold off. Let's go to the monthly first and have a look at what's happened. I think that if we think of how a market works, how we have the expansion and then the contraction, I think it's almost finished that contraction period of the cycle. And I say that because the moves aren't as sharp as what they used to be. So from this high here, May 2025, we've seen months that are in the order of 26% down, and we had this other month that was down 63%. And so you don't see that I'm cherry picking here. Let's have a look at one of the smaller ones, and that's 20% down. But as of late, the price action has been more subdued and it's been trading sideways, which gives me the impression that there's price agreement around this area, around that $1.50 to $2. Buyers and sellers are agreeing that we can hold at that price, that it's not worth less. Now, any news that comes out, obviously, it's going to be, and if it's good news, it's going to be very positive and will drive up that equilibrium. It will change the equilibrium from the buyers to the sellers. We've also got this huge gap that I can't see any other gap in the history of this stock quite as big, and unless you go back to this illiquid period of the stock, which you can't really compare to. But from the liquid part of it, and you can see that started basically in 2021, where it started to get more liquid. There's no gap that's this big. So if this stock was to go and fill that gap from its current price action, we're talking 113%. So that's doubling of the share price right there. So I think that this one definitely has legs. It's got potential. I'd be keeping a close eye on the news for this one, just to see what happens with that project. There is a little bit of resistance there at around that $2 mark that it needs to get through. And then, of course, the next resistance would be around that $3. So it seems to move in those dollar increments. But at the moment, it's holding up. If we put the level here at around that $1, if it does go to those $1 increments, then it's trading in between that dollar and that $2. So more conservative play would be to wait until it gets above that $2, maybe has a retest of that $2 and then jumps back up. Or if it has a retest of this $1, which would be great, I think, because it still is a good company. Yeah, if it has a retest and then you have a trading rule around here, beautiful. Then I think it's all sectors are go.
Yeah, awesome. I mean, interesting spot, interesting stock. Did you want to make a comment? Or
I think I did.
On to the next, yes. All right, let's get on to the next zip. Now, this one is interesting.
It is
isn't
interesting.
It?
I mean, look, those financial stocks or the tech stocks with that financial angle provides buy now, pay later. Financial services may perform well if consumer spending strengthens and credit performance remains stable. At the moment, it's looking, it's not looking as great given that the run that it had made it look like the golden stock, this one here in 2025, it looked fantastic. And it just shows how sensitive to news these stocks can be. And that's one thing to be mindful of while, it does go up in stairs or come down in elevators, remember. Now, we just need to see a retest of that low, some strength from the buyers after the low's been retested, possibly around $2. I'd be happy if it came back to around those levels, went sideways a little bit, had a setup, and then takes off above that $2.50 level. That could be quite good. It could head up around to $4 as part of that run, but at the moment it's still proving itself. It's early days.
But does it give you, I mean, when you look at stocks, and you know this as they unfold, And we've seen this recently with T&E. We saw it with Mineral Resources a few months back. There is this right now, I guess, reset for a lot of stocks where they're moving. They have had big runs. They're moving back to long-term trend, sustainable trend, and then they're getting that next leg up. And I remember going on Hot Copper a few months ago talking about this one exactly at those levels, because you draw a momentum line, it's right there, and there was real reason. The company did come out with some earnings downgrade, but at the end of the day, it wasn't like, again, it wasn't. They came out with their most profitable earnings report and got slammed. It was the first time they were actually profitable, and they got dumped. And it was like, well, hang on a second. Could it just be the case that these stocks, they've blown off so hard with euphoria, they're just coming back to trend?
Look, when it comes to a pullback like that, if it was a 20% pullback, I'd agree with you, but the fact that it's a 72% pullback is a different story now. So, and it's come all the way back to test that low. If it had stopped here and then taken off, then I'd say, yeah, we're in for a big run on it. More bullish, but look, I still haven't written it off. It could just be, I've seen lots of stocks make these sort of moves and then that's the low, and then all of a sudden you get this much bigger pull to the upside, but we could be seeing a little bit more consolidation towards that $3 mark before it then makes its next move. Yeah,
all right, so watch that one. Almost ready, not yet. Let's get to our final stock for this segment, Pedro, VEA.
Yes, Viva Energy, one of the only oil refineries that we have here in Australia now. Without getting on the bandwagon, obviously this is a big, kind of emotion-filled topic at the moment. We've had that recent fire, unfortunately, that happened at the refinery. Reports came out that it didn't affect their production too much, which was good. But really, I think that this one is going to benefit if the government decides to, without getting too political, if they decide to do something, pull their finger out, then, hopefully we can have some refineries or more refining of oil for our energy security here in Australia. That would be the smart play. I recently came back from Japan where they had 200 days of petrol in reserve and released it slowly to the public so they weren't affected by their petrol prices, whereas a country like Australia, rich in resources and minerals, and we only had, 30 days at most. So that's quite appalling in my opinion. So VEA, hopefully, for the sake of everybody and for investors, I'm hoping that it will get a little bit more funding and more interest into it. Of course, we're trading on the secondary market, so any funding, it won't be by you. By you buying this company, you're not directly putting money into their pockets. So just remember that you're just trading ownership of that company and the benefits of their sharing in their profits. So they operate a fuel refinery, like I said, and the potential margin expansion in refining and convenience retail could expand as well. What I like about this is that it had this sharp fall, and then it had that recovery and a little bit of a sideways consolidation, very similar to what we saw back here in 2020. And it actually consolidated from 2020 to 2021 and then had that eventual uptrend. And it was a nice orderly uptrend. Have a look at how beautiful that is. You could have just applied a nice trend line there and traded that quite easily. And now we've had that the uptrend start at around May 2025. And then now we've got that spike out in 2026. So again, roughly 1 year like we had back here. So if this starts a new orderly uptrend, then, that's not a confirmed uptrend. You could just put that as a little bit of a dash, a bit of a momentum there. If it does follow that momentum, then we could see a nice sustained uptrend for Viva Energy. And it pays out a nice dividend as well. I think that, anybody that's looking for that long-term play, you can benefit from the dividends as an added bonus. So right now, I think that the next level to watch out for is going to be that previous high of around that $2.20. And it comes back and retests that and then has that eventual rise, then we could be looking good. Or it could actually do something like this, like it always does, and just trail sideways for a little bit, and then has that rise once it hits that momentum again. And that could probably be, around that next year, sometime mid next year, that it has that next leg up. So I think that this one is good to watch. Right now it's trading at $2.37. If it does trade back up to that all-time high, then we are talking a rise of around that 62% at least. If it doesn't break that high, which then we could go much, much higher than $3.80.
Yeah, all right, fantastic. Now, before we move on, we've got an amazing hot stock tip and some great questions, but let's get your favourites, as we always do. Janine, ladies first.
Okay then. Well, look, it was a tough one for me, but obviously going for the stocks above $1, I like Appen, and I'll just show you the chart. That was Appen, which is one that Pedro talked about. And I also like this VEA for the watch list at the moment as well. Awesome.
Pedro?
All right, so I'm going to go with NH3. I like a little bit of excitement here, and I'll just show the chart again like Janine did. This is the one that broke above that trend there. And for the bigger play, you can't go past Viva Energy.
Yeah, fantastic. All right, now moving on shortly, as mentioned, we're going to get into our hot stock tip, but first, let's answer your questions. Eric writes, I've noticed gold is stalling on its recent run-up. Why is this? I also saw that France moved their gold back home from the US. Is this a warning for war escalating and gold taking off again? All right, I'm going to get your thoughts here, Janine, because it's true, France recently took the gold out of the US. And the gold price on this recent run has stalled after that 20% correction. It's not really gone and taken out new highs, which has been the theme and the story over the last couple of years. Often a country taking gold home is not a positive sign.
Look, I'm probably not the best person to talk about gold right now because I was following it for a while and I haven't been just recently. However, obviously gold is defensive. So when anything's going on, if there's a potential that people could flood the market with gold because they're trying to cash in, which we have to expect is going to happen eventually.
At some point, yeah.
Then it doesn't really matter. The point is it doesn't really matter what they're doing. It's all interesting, but what matters is what the chart's showing. And I think that it would have been better to ask actually. It's a great question. Would have been better to ask, what's happening on the gold chart and do we expect, a rise or fall in relation to this scenario happening?
Well, maybe we can have a quick look at the gold chart, if we bring it up and see what is going on, because it is interesting right now. So many people are invested in gold and, looking to, try to use gold to work out what's going to happen around the world. But, I know you're getting that chart right up now. What are your thoughts on where the price is and how it's unfolding?
Look, there were calls at one point for gold to be at 3,000. The next call was for gold at 5,000.
Yeah, and like I mentioned, Janine, really people are trying to get this idea on using the gold chart to find out economies. But you're right, at the end of the day, it's really, what they're really doing is buying and selling for profit. So right now it's behaving a little bit differently for me as it was over the last couple of years, especially after that big correction, 20% that blew a lot of people out the water. And the recovery hasn't been as strong as initially thought, but still early days, I think.
It is early days, I think you're right. And looking at the chart's really the way to go, because we can see here that regardless of whether they're selling it off or what they're doing, it's still holding up really well. So, there's a 26% fall that we've seen on it. It's in just a little bit below the middle of the range of that. 5,000 was the big target that many analysts had talked about, and it went through that. So you've got to expect that once a stock market, whatever it is, goes through a target that's so highly publicised as being the important level, that we're going to see some volatility around there regardless. But I would actually suggest to have a look at what happened in September 2011. We saw a little bit of a slowing of the gold price and then a sideways move that happened. It's not unusual to see that happen for quite a while, and we could be starting the next phase for gold, which may actually be the sideways move that we've been expecting.
All right. Well, I hope that answers your question there. Now, Matthew's email is next. I'm looking for an update on Orica, something like that. I'm looking to put in a spare bit of cash, and it looks cheap right now, as I believe it is nearing a low. When do you see it getting above 15 to 20 cents? thinking that this is a good level to get in. Pedro, I'll get your thoughts on this one because it looks like a bit of a specky. Ulrika, what are your thoughts?
Mate, I like the speckies, but this is even out of my field. I had a peek at that chart, mate. It looks quite horrible. Yeah, it's not the same stock like it was back here in 2016. I mean, this one was trading at $143 at its peak in 2020, and now it's trading at 9 cents, not even 10 cents. Something has, structurally broken in this company that has made it trade, and it's flatlined. Just imagine at the doctors when you're seeing that lifeline kind of beep up and down, and then suddenly you just flatline. That's what's happened with this stock. You'd have to go to the weekly chart to have a closer look, because even on the monthly chart, all I see is a line. I wouldn't be putting any money into this at all. I wouldn't even be touching it, be looking at it. Sorry, mate, I can't tell you anything good about it. Not even some spare money. Go buy some chewing gum or something, because right now it's going to waste your money on this. I'm having trouble just getting that chart to stick. So, look, if we were to offer some guidance apart from don't touch it, it's just that it's trading within a band, and that band is that low of 9 cents, and then that upper band is 18 cents, so doubling of that. I don't even know what rule you could use to enter this, apart from maybe a break of that momentum to the downside, but still, it's a different stock to what it was before, so the back testing wouldn't really do you any good. I'd just stay away from this one. That's my advice.
Yeah, I think I second that advice, Janine.
Look, some people will ask these questions at times because they're actually holding it.
Yeah.
And it's taken them by surprise. But I'd have to go back and look at what were the announcements, what was going on at this time, what's being said now. Not with a view to buy, but with a view to say, okay, well then I can understand that there's a problem with the company, that they're in some sort of strife. But I don't think it's going to be clear of anything, even the minimal amount, until it gets back above 15 cents as a minimum.
Yeah, all right.
I agree with Pedro.
Okay, Matthew, maybe if you're not in it, time for a better stock. But Henry's email is next, and he writes, I'm really focused on ethical investing and backing companies aligned with sustainability. But I've been looking at Origin Energy. It's clearly investing heavily into renewables and batteries, but it still has major exposure to gas and even coal in the short term. So do you see Origin as a genuine long-term clean energy play, or is it more of a transition stock that doesn't fully meet ethical investing standards yet?
That's a tough one, isn't it?
Yeah.
To answer, really. I mean, you need to go and do some research and listen to what the CEO's saying about where he's taking the company for a start. That's the first thing. What's their strategy? Where are they headed? Where are they investing more money? What are they planning to phase out going forward? Because it is a transition. It's not just Origin that's a transition. The whole market's in transition right now.
And it's also important to realise that these CEOs, they have an obligation to shareholders. I mean, at the end of the day, they're going to do what is best for shareholders. You would think, I mean, if we're being honest, to give that share price appreciation. And with Origin, unlike some of the other renewables, when you look at the direction of the share price over the last year and a half, I mean, what do you take favour over? Do you take favour of, is the CEO right? Or if he's pushing, or if he's doing a mix of things, or,
But even that, I mean, that's just information at the end of the day, just to support your thinking. If you've got questions in your mind, it's not the answer. The answer comes from, what's your strategy? It's not about what Origin's strategy is necessarily. Do you want to be buying into companies that they're on the fence, that have got an exposure to both? Because the ones that have already gone through the process, they're more likely to be smaller stocks, companies that are, specifically focused or targeted. And therefore, that's just going to increase your risk. So do you try and get some exposure to what's good by taking an Origin or a stock like that that's bigger, that's, less risk to you, one that you can find a good set of rules on if you've got the right knowledge? I think that's probably the better way to think of it. But
Yeah.
you might decide to have one or two smaller stocks in your portfolio if you've got 12 stocks, just to break it down. Like we talk about in the book, get the book and work out, how many stocks you're going to have. And then Origin could be one of them. I mean, it's still got upside to the all-time high. It's just a question of, have the rules been met and what's the risk to taking the trade?
Yeah. I mean, look, it all comes down to that at the end because...
And not to buy and hold. I mean, I think if this market's telling anybody anything right now with healthcare being treated the way that it has been, and look what happened to BHP and Rio for so long, they were sideways and down, and we've seen what happens in a global crisis, what happens to those sort of companies. It's just telling everybody just to beware, isn't it, really?
Oh, this year, if your eyes aren't opened up to understanding, hey, you need to be... timing is more important than anything. It's not what, it's when. Then I don't know when that'll come in because it's really showing up with so many stocks. And the volatility is only going to get more and more. And because of that, the timing needs to be even better. And
I mean, that's great for the upside and get ready for it because
it's awesome if you're
great opportunities.
Yeah, if you're well versed in looking at the things we're doing, looking at charts and focusing on the when more so than the what. I mean, the opportunities are amazing at the moment. Yeah.
I agree.
All right, fantastic. Now, let's move on to our hot stock tip for the week. Pedro, what have you got, buddy?
All right, so the hot stock for this week is Deep Yellow Limited, ticker code DYL. And they actually released their March quarterly activities report today. And the news was broadly positive. The company is quietly de-risking its flagship Tumas project, with construction readiness rising and a strong cash position backing it. But until final investment and financing are locked in, this remains a slow build story. Not a breakout catalyst just yet, but I mean, the chart will let us know if it is truly a breakout. Now, on the monthly chart, this has actually been on a nice uptrend since 2020, and it hasn't really broken that. If I put a nice momentum below that, you can see that it actually has respected that quite nicely. If I can get that to the bottom. It's respected that quite nicely. It has traded below it a little bit, but the general momentum has been around that angle there. And I wanted to bring up the price of uranium overlaid on top of the chart of Deep Yellow. So you can see that it actually tracks the price of uranium quite nicely. It does sometimes lead the price, but for the most part, it has been tracking quite nicely. And if you can see that this black line here, that's the price of uranium. It's now pointing to the upside, and we've got higher highs, higher lows. It's looking like in a nice orderly uptrend, and so is Deep Yellow. So whilst, yes, it's come out with some reports of funding and all of that, and that's good, really, this company relies mostly on the price of uranium for it to go up. Now, going to the weekly chart, it does have a gap to fill there, just up above around that $2.17. So I would think that in the short term, it could come up to fill that. But for the most part, I think it's looking quite bullish. It does these type of moves that it has a rise and then a fall, and then has another rise and another fall, and then we've got another rise. So that's really, for me, is the risk that we're now in that part where it maybe is having a little bit of a fall. So it could come back down possibly to around that $1.50 if it does have that fall, or could possibly even come back a little bit further to that $1.40, which was that previous high as well back here in 2021. So it could be in that contraction type stage, but then again, you need to be ready for that next move up anyway, which usually it does have after that contraction period. So for me, this is a nice watch. It's positive news for the short term, could come up, but just watch out for that momentum if it does start to respect it and then start to trail back down.
Yeah, fantastic. All right, one for the watch list. Now, if you want more from us, check out our video, 2 ASX sectors, 2 massive reversals, time to buy.